Thanks for tuning in to this broadcast of the Resilient Advisor Podcast. My name is Jay Coulter, and joining me for this episode, another Tactical Market Strategies, is my friend Chris Versace, the Chief Investment Officer of Tematica Research. Chris, thanks for coming back on.
Jay, happy to do it. Happy to chat with you and happy to hopefully shed some light what's going on for your listeners.
Well, we've got a lot to talk about. We've got charts.
Yes, we do.
And we've got charts about earnings. Let's start high level. Where are we right now in the earnings season?
So as you know, we're right in the thick of things with the December quarter earnings season. I believe that coming out of last week and into this week, about 64% of the S&P 500 has reported. We're going to get about another 65 constituents of the S&P 500 reporting this week. So by the end of the week, 77% or so should have reported. The numbers, if you were to talk about them, are they coming a little better than expected? They are. But I would also say that the uncertainty and weight of the coronavirus is really starting to hit more so on the expected results for the current quarter, that's the March 2020 quarter, than the December quarter. So it's one of these things that investors are trying to wrap their head around. And if you look at the chart, you can kind of see that it's a little bit of a volatile time over the last week, 10 days compared to what we've seen really in the fourth quarter. And I think what we're seeing again is investors are trying to wrap their head around the coronavirus, the impact not just on the China economy, but the global economy. I think Lenore Hawkins was on with you last week, and she probably pointed out that China's around 20% of global GDP. So it's something we really want to watch. But there's also the ripple effect on U.S. companies doing business over there, European companies doing over there, as well as the demand factors, whether it be travel, luxury goods, retail, manufacturing. This is all going to have a ripple effect on global GDP. And then, of course, earnings, which are the bread and butter metric that we use to value the market.
Let's talk about the volatility in the markets right here. Could you just speak a little bit to what you're taking away from what the VIX has been doing over this past week? And then as a follow-up to that, Chris, what type of guidance are companies giving forward-looking for this first quarter as a result of the coronavirus? Any specifics?
Sure. So if you look at volatility, I don't know if you have a chart of the VIX or not there, Jay, but if you did, it was very low throughout the fourth quarter, even into the beginning of January. And then as the news of the coronavirus started to spread and pick up acceleration, or as we say, had a vector and velocity that was increasing, the uncertainty ratcheted up, and we saw that reflected in the VIX. And we've gotten, I would say, some head fakes here. Last week or early on, there were reports that there might be some potential, vaccines for the virus. And then all of a sudden we heard that, more cases were being uncovered. Deaths have continued to climb. So it's very much a push-pull of uncertainty. And I think that's what you're seeing in the VIX. Again, as time goes on, investors are trying to wrap their hands around what all of this means. As far as what we're hearing from companies, 10 days ago, 2 weeks ago, we saw companies start to issue some guidance that was a little wider to the downside than they may have done. Apple did that. Remember that one of their key iPhone partners, Foxconn, is in China. So, depending on what happens with the return of that factory, not only just getting back to production, but ramping back up to full production, that could have an impact on the amount of iPhones Apple can ship this quarter. But, we've heard warnings from VF Corp, Canadian Goose, as well as a number of other luxury companies. Airlines continue to restrict flights over there. That, of course, is going to impact their earnings. And I think even this morning, British Airways said that they are canceling all flights to China until April 1. And I don't think that's an April Fool's joke, Jay.
I don't think that's an April Fool's joke either. It's in fact quite serious. Let's talk about Foxconn. And if that does not reopen, what is that going to do to Apple's supply chain? And would that surprisingly end up creating a shortage and thus inflation in iPhones?
I don't think it's going to create any inflation in iPhones. Apple is pretty stringent about their pricing, kind of what they do. If there were some currency moves against them, they might adjust their prices, little tweaks here and there. But the big question is, if you come off the December quarter, we saw a surge in iPhone sales really due to the take up for the iPhone 11, their new flagship product. So the question is, what will the shipments be for the March quarter? And that's the uncertainty. I'm sure that Apple had some stocks as they came into the quarter. But again, the longer Foxconn is down, the further down those stocks might ramp or disappear. So it becomes a question of, does Apple get caught in a bind? The other issue for Apple, though, Jay, is there's a lot of chatter about this new low-tier iPhone that will be coming in to really target the emerging markets. Production probably happened, right? But we don't know how much. The expectation is that Apple would launch this sometime in the second half of the current quarter. That may or may not happen now. So, again, not sure what all of Wall Street is looking for, but that's another reason to think that iPhone shipments could come in a little weaker than what people were expecting back in early January.
Interesting. I want to talk about some specific stocks, but before we do that, let's talk about what's coming out this week in terms of information that investors and financial advisors need to digest. What do you have your eye on?
Well, it goes without saying that anything and everything regarding coronavirus and global GDP will be something to watch. But when we look, dial into the U.S., there's really a couple things to pay attention to. One, Tuesday, Wednesday, Fed Chairman Powell will be testifying before Congress. Last week, the Fed kind of slipped some things out about the coronavirus being a new uncertainty on the landscape for them. So investors are going to want to dial in and really listen to what Powell has to say. Having said that, do I expect him to say anything clear cut? Of course not. They never do. It's always break out your secret, Fed speak decoder ring to see what they're saying. But we'll be trying to break all that down in the NASDAQ Daily Markets notes. We also have January retail sales, and we also have January industrial production that's coming out. So these will be, pieces that we want to, dial into as we start to frame out what U.S. GDP is looking like for the first quarter. And so far, Jay, it looks like that again, early on in the current quarter, but so far it looks like that the U.S. economy is still going to be the best block on the best house on the economic block. Got my metaphors a little mixed up there. Well, it happens when you're firing at a clip pace.
Well, and you produce a whole lot of content, so I imagine it's very, very easy for that to happen. Well, all right. For live viewers on Facebook, Twitter, YouTube, or LinkedIn, please send in any questions that you have for Chris when he comes on. You'll notice we're developing a fairly regular cadence here of doing this generally once a week. We try to do it on Monday with either Chris or his partner, Lenore Hopkins, and we'd love to get your questions in real time as they come. So, Chris, with that, let's pivot over to some stocks that you have your eye on. Listeners, none of these are predictions. These are just stocks that are worth noting this week that Chris has highlighted in his weekly daily NASDAQ daily market note.
Yeah, so the companies you want to talk about, let me just get this out of the way. It's really what they're going to say about the impact of the coronavirus. Again, just circling back to my comments before, investors, us and everyone else, they're trying to wrap your hands around the vector and velocity of what's going on. Are we starting to see the impact slow? We will see. I still think that even if the number of cases really starts to slow, it's still going to have a pronounced impact on the current quarter. So to really gauge that, we want to dial into a number of different companies that haven't so far really said anything about the impact of the coronavirus. So the first one I believe you got there is Hilton, Jay.
That is correct.
Yeah. So if we think about the restrictions in airline travel that's happening and the lack of just overall movement around, in and out of China, it's going to have an impact on the hotel business there. So we want to hear what Hilton has to say. We also want to hear what they're saying about the U.S. coming out of the holiday travel season, what their outlook is for the current year as well. I suspect they might paint a more favorable picture of the second quarter. One, perhaps because of a rebound as the impact of the coronavirus starts to fall. We'll see about that. But the other two is also the timing associated with the Easter holiday, which is in April this year.
So, Chris, this is anecdotally. I am scheduled to go out to San Diego next week.
That's right.
White Charts has invited me to speak on a panel at the famous T3 conference. And here's the thing. There is a real thought exercise about whether I should go out or not. If the rate of the coronavirus speeds up, do I want to go through the Atlanta airport and go out to Southern California. And I thought I was being a little conspiratorial thinking that way. And in speaking to folks over the weekend, other people are going through that exact same thought exercise.
Well,
When does that
well,
start to have an impact?
Well, Jay, it's funny you say that, because my comments about Hilton were really focused in on what they're going to say about China. But it is true, right? We are starting to see a greater cautiousness ripple through, so much so that Sony and Amazon are joining NVIDIA, Ericsson, and other companies by not going to the Mobile World Congress later this month. And that tends to be a who's who, what of technology and mobile for the coming year. So that's actually a pretty big statement. Also, too, I believe Lockheed Martin and Raytheon have also said that they are not going to attend the largest aerospace show in Singapore, again, citing coronavirus. So you would not be alone in pulling back and restricting your travel. And again, that will have an impact not only on airlines, but on hotels, restaurants, and the like. So again, it's something that we want to pay attention to.
Yeah. All right. Next up, Make My Trip.
Again, goes right to what we were just saying. I hate to be overly repetitive, but Make My Trip is a great way, particularly for folks in the emerging markets, to book their travels. So when they report, we want to really hear what do they have to say. Again, not just about airlines, but hotels. When do they think it might happen? Are they taking any charges? Again, to assess the impact of what's going on the business.
So that particular stock is already flirting with its 200-day moving average. And you're right, commentary that they share will be really impactful in going through that decision-making process.
Well, I think so. And again, as we're going through these comments, particularly with Make My Trip, there might be comments that can be read in for Marriott, for Hilton, for Hyatt, for other airlines that we really haven't heard too much about of late. Perhaps, it's going to be a call to really dig into and digest, to reaffirm what we're hearing from other companies, as well as get a beat on maybe what others are going to say as they report over the next couple of weeks.
So different industry, same data-rich earnings call, I'm sure. Applied Materials.
Oh, yeah. Applied Materials is one that we really like. I mean, if you think of the disruptive nature of technology, a lot of that is driving the demand at Applied. Everything from the ramp in 5G, AI, I'm trying to think, gigabit fiber, for example, also to AR, VR. There's just a whole host of technologies that are, spurring chip consumption and driving the need for incremental chip capacity. And that's where Applied comes in. But here's the big but, Jay. Last year, Applied derived about 29% of its sales out of China. So again, the current issues with the coronavirus, that impact is probably going to weigh on Applied. And again, we're going to want to hear what they are seeing in terms of disruption, what they are thinking in terms of the disruption winding down, and what the economic impact will be, as well as how quickly they can get back up to levels that they were expecting, late last year, early this year.
Well, and it would seem to me the stock, if you were only going to be looking at one stock this week to see what potential guidance the company gives for earnings and the impact of coronavirus, would be Alibaba. What are your thoughts?
Well, think about it, right? People in China are trapped at home. There are provinces that are shut down. People still need things. And I think, we're probably going to see Alibaba come out as a beneficiary of that. Whether it's because people in the near term might, temporarily shift over because they need certain things, or because they're simply going to embrace digital commerce at an even faster clip because of what's going on. And I think when we get out of this, the reality is, just like the rest of us around the world, people are going to be going, you know what? That's pretty easy. That's pretty fast. I don't have to go anywhere, and stuff is coming to me. So I do think that this could be a not so much a tipping point, but an acceleration point for Alibaba's business.
And do you think we're going to be able to glean some really pertinent information from that call on the impact it's having in China domestically, or do you think it'll be a very guarded report?
That I would like to think that we're going to get some good insight on what's happening in the China market. But again, we will see. They might take a cautious approach in terms of their guidance, their outlook. If I was a company doing this, I would be contemplating between throwing the kitchen sink in and getting all the bad news out there, or trying to, go hand in hand with that, under promise so I can eventually outperform when things start to rebound. And I think that's the real conundrum here, Jay, which is, as more data comes in, we see and understand that the China economy is slowing, the ripple effect is being had. We know earnings are going to come down. The question is degree, but the bigger question is how quickly can the China economy recover? Can the global economy recover? And can earnings expectations, will they pick up as well? So for me, 2020 EPS for the S&P 500 in January was expected to rise around 10% year over year. That's right around 8.2% today. So we've seen the virus and other things start to take a bite out of that. But again, as we get through the next couple of weeks, is it something that people might say, oh, here are reasons to think that 8 can go a little higher? Or is it likely to tip a little lower? To me, that's the big conundrum as we look at the market today, which, by the way, as it continues to move higher, it gets increasingly expensive, and it's a lot harder to find quality companies.
Chris, I'd like to wrap up with a question that has nothing to do with any of this and everything to do with news sources. As somebody who produces a tremendous amount of research and somebody who does a tremendous amount of his own individual work, where do you think folks should go and find information about the coronavirus? And I want to put a little lens on this. I made the mistake of going deep and reading everything I could about the coronavirus this weekend, from well-known news outlets to Twitter handles of people that you don't even know. And it's hard to tell what is actually happening. But this seems to be incredibly important. So where do you recommend folks get their information as it relates specifically to the coronavirus?
Well, I think just a general comment, Jay, anytime you have so much information, right, you always run the risk of what people call analysis paralysis. Too much information, you can't get a clear beat on things. And with the coronavirus, this is a changing landscape almost day to day. When we wrote the NASDAQ Daily Markets Note on Friday, the numbers for outbreaks and deaths were here. We woke up this morning to, early to get a jump on that note for today, and, they had changed dramatically. So I am probably looking at a lot of the same sources that you are. That's everything from, Bloomberg to CNBC to the Financial Times, to really try and triangulate with what's going on. So, I'd like to say that I have some better insight than that. You can check the South China Morning Post if you like, the Nikkei news feed as well. But by and large, Jay, I think we're all swimming in the same pool of data, or at least information, to try and figure out what the data is.
Excellent. Chris, thanks so much for coming on for another episode of this Tactical Market Strategy series. Again, listeners, if you have questions, if you're not able to catch a live broadcast, send them over to us on Twitter if you're watching this after the fact, or if you have some before recording, feel free to send it over. My email address for podcast questions is podcast@jcoulter.com. And for more information about Chris, Lenore, and the work they do at Tematica Research, please visit tematicaresearch.com. That is tematicaresearch.com. Thanks again, Chris.
Thanks, Jay. Have a great week.